What's up, trader? Is it possible to catch big trades like this? The answer is yes. It is absolutely possible to catch big trades like this. In fact, without catching a big trade, a trader will never be able to be profitable over the long term. Then you might say, well, forex wizard, how can I catch big trades like that? As soon as I open the trade goes the other direction and hit my stop loss. Well, to catch big trades like that, you need to understand the concept of overextended market. When a market is overextended, the market has a huge momentum. Once you catch that momentum, you can slide with the flow and catch big trades like this every single day. So in this video, I'll be showing you exactly how you can find out overextended market and you can catch trade like this as soon as you finish this video. Keep in mind, this information you will not find anywhere for free. So make sure you stick till the end. Now before I begin, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys and girls, so let's begin. First let me explain this overextended market situation in a simple diagram. It's very easy to understand, trust me, and stick till the end to understand what it is. So make sure you stick till the end to grab everything I'm giving in this lesson. So what you see, let's say and assume that there is a market in a downtrend. So what is a downtrend? When you see that the price is creating an impulse correction, impulse correction, impulse. This is the downtrending market structure, creating series of lower high and lower low, right? This is the normal downtrending market structure. So in a downtrending market structure, as a rule of thumb, what it should do, so when you see a market created this move and then pull back, in the next move, normally the market should break this previous support, previous low, and create a new low, right? And once it finish its impulsive move, when it will go for a pullback, it should test the previous support as a resistance. Okay, it should test the previous swing low with the swing high. So that's how the market moves normally. Okay, and it maintains a trend line in most cases. You'll see that, and will move in that fashion. But at some point, you could see that this market violates the market structure, and that is where the concept of overextended market comes, and that is where the big trades comes in mind. So what might happen, let's say this market at some point has come here, okay, and then it should, if it is maintaining the market structure, it should move up to this level and up to this point or a bit upper than this and should come back down. It shouldn't have broken this high. Okay, once it breaks this high, it basically violate the market structure. Okay, and that is where the bigger trades come, and this is the manipulation happens in the market over and over again. So what you could see that at some point this market has broken the previous swing high here, you see that, and the market turns into an overextended market, and many traders fall in the trap of thinking that, okay, this market is now broken out of the trend line, okay, change its downtrend to the uptrend, let's buy, and the big boys started to catch them. And that is where you will be catching the big trades with the big boys. Smash the like button now. So what you will do is, you see that when you see this market is overextended, keep in mind that a trend is not changed in one day. A trend is not built in one day, and it will not change in one day. In most cases, you see the trend will continue. Okay, so but that means that this overextended market is basically to grab the liquidity, because a lot of people are buying. Now they will turn into a seller and big boy will sell, giving them the credit of buyers. So that is where you have to catch the big trade, finding out the overextended market. Once you understand it, you will become a consistently profitable trader, as long as you manage your risk properly. Risk management is very, very important. It's a simple strategy, guys. So now let's jump onto the real chart. Let me show you quite a few examples of this kind of overextended market in both bulls and bear market, so that you can understand it right now. Okay, guys and girls, so first let's start with this example on Euro AUD on the 4-hour time frame. What you see that this market over the long term is in downtrend, no doubt about it. You can see that long term it is in a downtrend. So the first thing you need to find out to find the overextended market is the long-term trend. If you cannot find out on the lower time frame perspective, you can jump onto the higher time frame on the daily or weekly or monthly or whatever time frame. Even you can find this kind of trade on the lower time frame on 15 minutes, on 1-hour chart. But you need to find out the long-term direction of the trend. So once you found the long-term direction of the trend, let's say this is a downtrend, then you need to find out an overextended market to the upside. Okay, so what you see that Euro AUD, what it did, that look at this one here, the price created this series of lower high, okay, and it is moving in this downtrend. Okay, let's draw this trend line and then you can see where it is being overextended. Now you can see the price was creating this series of lower high for a long time, right? This high, this high, this high, series of lower highs, maintaining this trend line. But what happened? Look at here. Suddenly the price has broken out of this trend line. So once it has broken out of this trend line, what it did, look at this lower high here. You see that lower high? Let's draw a level on this lower high. And then what you saw, only little bit, one candle here, okay, that has broken out of the previous candle's high, okay, violated the market structure, created an overextended market. Now if you look at the 5 minutes, 1 minute chart, you could see a bigger move here, okay, in this smaller leg. So it needs to be overextended. Even couple of pips will give you a big edge over the market. See what happened after it violates this previous high, created a higher high, and then closed back below with a strong bearish engulfer. And that is where the big trades comes in. When you see the market is opposite direction of the trend, overextended either to the upside in uptrend, downside in the downtrend, that is where the big trades come. Now if you take this trade, see, when you understand this overextended market, look at this, what trade it could be at least a 1 to 6 risk to reward ratio trade, guys and girls. This is how you can understand an overextended market and you can catch a big trade. Now the same thing is being repeated here. You can see this price created an overextended here, and look at this one. After this big move, okay, big move, the price came to the same zone again. You see that same zone and created same kind of overextend. This is the previous high, and you see the price again created a new higher high, okay, in this downtrend, created this overextended market, and then again move. Now this is a live market and we are on a trade in a good profit, and we know that this market will continue to drop because this is a long-term bearish market, guys and girls. This is the simple concept. Let me show you quite a few examples. Don't worry, just stick till the end. I'm sure that you will understand it and you can find good trades. If you have any question, don't hesitate to ask me in the comment section. Now let's jump onto some other market conditions. Okay, guys and girls, so let's see this example, easy to understand. This is Aussie dollar. What you see that the market creating a strong downtrend, there is no question about it. You can see it's a clear downtrend. Every candle is red and the price is moving with a high speed towards the downside. Now in this zone, what you saw that this Aussie dollar has created this nice looking downward channel. You can draw this support and resistance of this channel. And now what you saw suddenly, okay, after this doji, without any notice, the price has broken out of this channel completely to the upside with an aggressive move. And this is where many traders will be trapped. They will say that, okay, the price has broken out of the trend line, okay, from this channel, is going up. Wow, that's a buy setup, let's buy. And once they will buy, the big boys will start to sell. They will sell from here with this doji. What happened after creating this doji? Now this doji is a completely overextended market. Look at this one here. There is a long bearish engulfer. If you draw a level, you saw that this doji basically has crossed all this high, okay, completely to the upside. And these are the subtle clues that you need to pay attention when you are trading, that where this candle has dropped, where it has started from. And after that doji, if you trade this one, if you can spot that overextended market in the opposite direction of the trend, then what happened? Look at this. If you trade this one, okay, as soon as the candle close, and if you keep it a stop loss above, let's say all this high, look at this, what trade it could be. Unbelievable. You see that more than 22 times profit. You don't need to take that much, but once you can identify them, you can easily catch at least 5 times, 6 times profit from the single trade. And that's how profitable traders make money. They patiently wait for this kind of overextended market and then they catch the trade with a high probability. Now let's jump onto some bullish market to see how you can identify an overextended market to catch the big trades. Okay guys and girls, so let's look at this example on gold. Now gold does this all the time. Gold loves to create overextended market, and that's good for us, isn't it? You will find this kind of trade in gold more and more. So how you can identify, look at this one here. It's a perfect example. You can learn from it. There is a big impulse, okay? It's an upward impulse. Uptrend has broken all this resistance. And then correction. On the correction, what you have seen, the price tested this previous resistance as support. So continuation of the trend, gone up again, created a new higher high, and then came back down, respected the previous swing low. Okay, market structure is not violated, created a new higher high. Okay, and then respected the previous swing low. The market structure is not violated. And then what happened? Gold has failed to create new higher high. And then look at this here. Okay, now if you separate this price from here, you will see that, you see the price was respecting the market structure, series of higher low and higher high, uptrend. Suddenly look at here, this one has broken the previous swing low completely, has violated the market structure. So once the market is overextended, as the trend is up, suddenly the market has violated the market structure. There is something that we need to pay attention, and that is where we have seen that the price basically created this long wick candle that has grabbed the liquidity from this important level of long-term support. So this support has been violated completely with this long wick candle, and that is a trading candle. When you see a candle has formed like that, okay, that has violated the market structure on the lower time frame, such as on the 5 minutes, 15 minutes, as I told you, you could see a couple of candles down. That is an overextended market. Once you found that overextended market, trade that. Now look at this, what trade you can catch if you take this overextended market is almost more than 8 times profit. And that's how the professional traders, hedge funds, big boys trade the market. They patiently wait for an overextended market, opposite direction of the trend, and then buy or sell and then hold the trade for an extended period of time. And that's how you can catch the biggest trade possible from the market. I sincerely believe that this important, valuable lesson was helpful to you. This strategy will really make you profitable if you understand it. If you don't understand, don't hesitate to ask a question in the comment section. Thank you for watching. I'll see you soon in my next video.